Hey everyone, welcome back for another deep dive. You know
Yeah.
how we're always talking about how to make smart money moves, especially when it comes to planning for your kids' college. And let's face it, college costs are terrifying.
Oh, yeah, absolutely.
You're trying to save, but then you're like, wait a minute, every dollar I save could actually end up hurting my chances of getting financial aid. It's a total catch-22.
It really is.
Well, today we're going to deep dive into a strategy that might just blow your mind. We're talking about using permanent life insurance as a way to save for college.
I know what you're thinking. Life insurance for college. It sounds crazy, right?
Right.
But stick with us because when you understand how the FAFSA, that whole financial aid system works, this approach actually starts to make a lot of sense.
Okay, so we've got a bunch of excerpts here that we're going to be diving into. And the thing that really jumps out at me right off the bat is how traditional savings methods, like 529 plans, the ones everyone tells you to set up,
Right.
they can actually hurt your chances of getting financial aid because they're considered assets on the FSA form.
Exactly. And you wouldn't believe how much of a difference that can make.
So like you could have $50,000 saved in a 529 plan and think you're doing great.
Yep.
But then, bam, the FAFSA sees that 50 grand as an asset, and suddenly your kid might qualify for way less aid.
Right.
But now imagine if you had that same $50,000 tucked away as cash value in a permanent life insurance policy.
And that's where things get interesting because the FAFSA doesn't count that cash value as an asset.
That's huge.
Yeah.
So we're talking about potentially thousands of dollars in extra aid just by using life insurance instead of a 529 plan.
Potentially even more.
My mind is blown. Okay, so before we go any further, I need a little life insurance 101 for those of us who aren't, finance gurus. How does permanent life insurance even work? Especially when we're talking about using it for college.
So with permanent life insurance, you pay regular premiums and there's a death benefit, which is what most people think of when they hear life insurance.
Right. That's the whole, something happens to you, your family's protected thing.
Exactly. But there's another key feature that's super important in this context. It's the cash value that builds up over time. Think of it like a special savings account that grows right alongside your policy.
So like a piggy bank that grows without being taxed, and you only pay taxes when you take the money out.
You got it.
Okay. But wouldn't it be better to just invest that money in the stock market? I mean, potentially get a higher return.
That's where the beauty of tax-deferred growth comes in, so that cash value inside your life insurance policy, it grows without being taxed every year, unlike a regular investment account.
Oh, I see. So you're not losing a chunk of your gains to taxes every year.
Exactly. And then when you need the money for college, you can withdraw it in a way that minimizes or even eliminates the taxes you'll pay.
Hold on a second. So the money grows tax-deferred, and I can access it tax-free. Wouldn't that make it better than a 529 plan? Even if the 529 wasn't messing with my financial aid?
It's definitely possible with a 529. You're locked into using the money for qualified education expenses, which sounds good in theory, but what if your kid decides not to go to college?
Or they get a full scholarship.
Exactly. With life insurance, you've got options. You can use that cash value for anything, a down payment on a house, starting a business, even your own retirement.
Wow, so the flexibility is a huge. Plus, okay, I'm also seeing here that Diversified Insurance Brokers has some pretty amazing software for college. Planning something about matching students with colleges. Can you tell me a little more about that?
Absolutely. So even with the best financial plan, finding the right college fit can be a nightmare. You've got applications, acceptance rates, financial aid packages. It's overwhelming.
Oh, totally.
Our software takes the guesswork out of the equation.
So it's not just about how much money you have. It's also about finding colleges that are likely to accept your child and offer them the best financial aid.
Exactly. It's all about maximizing their chances of getting in and minimizing the amount you have to pay.
That sounds amazing. Almost too good to be true.
Well, it's all based on data and insights. We analyze your child's academic profile, their grades, test scores, extracurriculars, and compare it to a huge database of colleges. We're talking acceptance rates, financial aid data, the whole 9 yards.
It is so smart.
We even break down how different schools structure their aid packages. Do they lean more towards grants or loans, that kind of thing?
This reminds me of this friend of mine. Her son had like perfect grades, stellar SAT scores, the whole package.
Wow.
And he got rejected from his dream school.
Oh, no.
It was heartbreaking. This software could have helped him understand his chances realistically and, maybe target colleges where he was more likely to get in and get a good financial aid package.
Exactly. It helps families avoid those kinds of surprises.
So bottom line is permanent life insurance gives you this unique way to save for college while actually maximizing your financial aid eligibility. And when you combine that with a tool like Diversified Insurance Brokers College Matching Software, it's a game changer.
Couldn't have said it better myself. It's all about being proactive and thinking outside the box.
This has been such an eye-opening deep dive for anyone listening who's feeling totally overwhelmed by college planning. You are not alone. Informed decisions, early planning, that's where it's at. And I strongly encourage you to reach out to Diversified Insurance Brokers, learn more about their services. Who knows, this might be the strategy that helps your child achieve their dreams without being saddled with a ton of debt.
And here's a final thought for you. If college costs keep skyrocketing at this rate, how will that impact the effectiveness of those traditional savings methods compared to this approach? Something to think about as you plan for your child's future.
That's a great question. Thanks for joining us for this deep dive. We'll see you next time.
See you later.
Bye.